In real estate, a lot of times we focus on tax deductions and we don't talk about all of the regular taxes that we have to pay as real estate investors and business owners. So in this video, I'm going to break down 7 common taxes that most real estate investors have to pay every year so that you don't forget to pay your taxes and so that you are prepared for your end of year tax planning, which is coming up. Hi, I'm Maura. I'm a full-time real estate investor. I have been for almost 7 years now. I've flipped over 100 houses and manage a rental portfolio of 50 properties, and I give out real estate investing tips every week. There are 7 very common taxes that you may have to pay as a business owner and real estate investor. The first one is self-employment tax. This equates to roughly a 15% tax rate. And these are the taxes you have to pay for Social Security and Medicare, and they end up being about 15%. They do have a limit of $160,000, so this is an annual tax that you may have to pay as a business owner. The second tax is income tax, and this is taxed by the federal government, also augmented by many state and local governments. And this is a progressive tax that increases as your business's income increases. So the marginal tax rates vary from 10% all the way up to 37%, depending on the amount of revenue that your business brings in. The next type of tax that many of us need to pay as real estate investors is short-term capital gains tax. And this is a tax on the profits from assets that are held for 1 year or less. And short-term capital gains are based off of your income tax rate, so your tax bracket, but they're usually in the 20% range and apply to sales on properties that we hold for a year or less. So if you're like me, you flip houses or you buy and sell houses, this is something that you need to plan for pretty much at every transaction and every year. The next type of tax is long-term capital gains tax. So this is a tax that's applied to assets that are held for a year or more. The tax rate for long-term capital gains is 0, 15%, or 20%. Based on your taxable income and filing status at the time, and in general, they are lower than short-term capital gains taxes. The next type of tax that most of us have to pay on an annual basis is a business privilege tax. And this will vary state to state, but usually it's either a flat fee or it can be based on the amount of revenue or net worth that your business brings in. But usually you have to pay an annual amount to your state and local government that you are doing business in. So just be aware that your business privilege taxes are due every year, just like number 7, your property taxes. So of course, as real estate investors, most of us are paying property taxes every year. We usually get our tax bills in October and have to pay by December 31st. And property taxes are based on our property's value, although the millage rate applies to the tax assessed value, and this varies state to state, as many of you know. And it also depends on the use of the property and sometimes some other variables. But most of us have to pay property taxes every year, so this is very important part of your tax planning and your general financial planning every year. Okay, just to recap, there are 7 common types of taxes that we as business owners and real estate investors need to plan to pay every year. And those are self-employment tax, income tax, corporate income tax, short-term capital gains tax, long-term capital gains tax, business privilege tax, and property taxes. And I have a helpful little spreadsheet and checklist that you can download for free in the description below that breaks down all these different types of taxes. You can use it as a checklist when you're going through your end of the year tax planning. You can go ahead and send it to your accounting team just to make sure that you aren't missing paying any of your taxes, and it can help you plan ahead for the future year. If this was helpful, make sure that you give our video a like, that you subscribe to our channel, and that you stay tuned for our video next week. Thanks for watching.